You're welcome back to my YouTube channel. In this video tutorial, I'll be taking you through on how to trade the futures market on Binance. If you haven't watched my previous video on how you can trade on spot, I would recommend you do that first. And also you need to watch this video to the end because I'll be explaining it step by step. This video that I'm doing is a kind of video that many people monetize, but I'm releasing it for you for free and so that you can learn. And after this video, the next video I'll be uploading will be how to manage your risk. There are a lot of problems people have when they trade futures. One of the reasons why people loses their money is because they cannot manage their risk. They cannot control their greed and they cannot control their emotion. So you need to understand this, and I'll be doing the video, and if you follow the principle I'll be giving you, you will never lose your money. So follow me to the end, especially if you are new to the crypto trading platform, the futures crypto trading platform. Make sure you follow the video to the end so that you won't make a mistake while doing the same thing. Please note that this video is just for educational purposes. I am not a financial advisor. So the first thing you would need to do is to register a Binance app. Register in a Binance account. If you haven't done so, just make sure you check the description of the video and register a Binance account. So after registering, you will find this interface. Now you move to futures. So this is futures. When you get to the futures, you will find so many things. They call futures trading perpetual, and the reason why it is called futures, let me just explain. I will be using layman language in a way that you'll be understanding it easily so that it won't complicate things. Now, if you are trading on spots, it's like a normal market. I have 10,000 let me use the global currency. I have $100 with me and I want to purchase a book with the $100. So I go to where they sell the book. I enter the amount I want to. I select the book. I enter the amount and I purchase the book, and the book becomes mine. So also on the spot market, what you are doing when you have money on your Binance wallet, you have your money USDT on your Binance wallet and you want to purchase your coin. For instance, you want to purchase Bitcoin. You have $30,000 on your spot wallet, and one BTC, let's say for example one BTC is currently $30,000 and you want to buy for $30,000. So when you buy Bitcoin for $30,000 and Bitcoin moves to $40,000, that is $40,000 minus $30,000. That's you have $10,000 profits. $10,000 profits. So you have $10,000 profit. So when you buy and you sell. So the idea is to buy low on spot and sell high. That's how you make profits. People buy low and sell high, or some people buy and hold for long. They hold for long. There are traders and there are hodlers. Traders are those that trade daily and make money, while hodlers are those who buy a coin that has potential fundamentally and hold the coin for a very long time. You can check my video on how to place trades on spot market for better understanding. So having this understanding now, directly you have a profit of $10,000 after buying something for $30,000 and you sold it for $40,000. But when trading on futures, there is an opportunity, there's an advantage you have, and this advantage can also be a disadvantage, and this is where you should pay attention. The advantage is that you can make a lot of money on futures, and you can also lose a lot of money on futures. But if you follow this video to the end, and make sure you follow the next video I'll be doing to avoid making the video too long, that is how to manage your risk and how to avoid getting liquidated. Just make sure you follow the principle. So make sure you subscribe to this channel if you haven't subscribed, and turn on the notification bell icon for subsequent videos. So this is, for instance, this is Sand USDT. This is a coin that can be traded. Sand USDT. Let me just go to BTC USDT. BTC USDT. Now this is BTC USDT, and the current price for BTC USDT is $31,661. Now I'll be explaining the interface first before I move into how to place trades on futures. Now you see red here and you see green here. You see the changing figures up and the changing figures down. The changing figures up here on red are the sellers, those who are selling Bitcoin at the current market price, at this market, at the prices that you are seeing there, while the green one here are those that are buying at this price. So one of the differences between trading on spot and trading on futures is that when you are trading on spot, you are solely buying. You are only buying and you are selling when it goes up. When it goes up, with the idea that okay, you want to make profit. But when you are trading on futures, you can make profit buying and you can also make profit selling. You can make profit without buying. You just click on sell and yet you still be making profit. So the word, that's where you see long. You are longing a position and you are shorting. When you are selling, you are shorting a position. I'll be explaining this. So the one you are seeing up here, there are two types of margin. There is the cross margin and the isolated margin. What's the difference between this? Now let me make a transfer. Let me transfer 10 USDT to my futures wallet now for the purpose of this training. Okay, I've transferred $10 to my futures wallet. Now look at this. This is cross margin. This is cross margin. When you are on cross, okay, I can't. Let me just, because of what I have here, let me just change it to what I'm not trading currently. Okay. So if I'm on cross, the reason why it failed was because of I have some other limits, some limit orders here, about 12 of them for some purposes I'll be explaining. So cross. So when you are on cross, it means that when you are trading an asset on cross, it will be trading with a total amount of the capital on your futures. For example, if I open a position now on ADA and I click on buy ADA at this particular price, I'm buying ADA at this particular price, that ADA will be going up, and I'm trading. Even if I selected trade with only $2, even if I select only let me just see. Can you see now? When I select 12.8 USD, what it will cost me is 2.58 US dollars. So if I'm trading with 2.58 US dollar, because I am on cross margin, it has access to all my remaining balance, meaning that instead of going up, if the trade goes against me, it has the tendency of liquidating my remaining balance, of clearing the remaining balance I have here. So it will enter my balance, even though I selected that I want to trade with $2.858, or what it will cost me to enter this position is just $2.58. But because I'm on cross and I didn't set it, let's say for example I didn't set a stop loss, or my liquidation price is closer. So if it goes down and keeps on going down, it will, and it has maybe I'm already on minus $2.8, meaning that I'm already on a loss of $2.8. It will keep on going down till it finishes all the $10 on this available balance. So it will enter my my available balance. But if you are trading on isolated, what you are saying is that you want the position that you are entering into now should not touch your remaining balance. It should only take the balance of which it costed you to hold the position. Let me say, for example, let's see now, cost 2.45 USDT down here. So if I open this position that costed me $2.5 USDT, once the trade goes against me and it gets liquidated, it will give me my liquidation price. My liquidation price is the price at which when the market goes against me, uh, it it will take all the balance that I'm trading with. It will take it away because that is what I'm trading with. So when it immediately it hits the liquidation price, immediately it touches the liquidation price, the amount I used to enter the position also will be gone because the trade did not go in my favor. The trade went against me. So that is cross and isolated. Now for the leverage here, this leverage means I explained earlier that if I have $30,000 and I bought Bitcoin for $30,000 and I sold at $40,000, I'll be having $10,000 profit. $10,000 profit. But when I'm trading on leverage, when I'm using leverage to trade, and for example, I'm on 10x, let's say I'm on 10x leverage now. I'm on 10x leverage now, and I have 10 USDT, and I want to buy, let's say I want to long this ADA for 10 USDT. Now, if it costed me, if I use 100% of ADA or 100% of my balance, this is where you move it. If I use 100% of my total balance on my futures wallet, on my wallet, if I use 100% of the capital on my futures wallet to open this position of ADA, if I use this what's it called, if I use the 100% of the capital I have on my futures wallet, now this is it costed me $9.94. Now if the trade moves 1%, instead of me to see 1% of my capital, I'll be seeing 10%. Why? Because I'm leveraging. Leveraging is like I'm borrowing. So I'm entering into the position with opportunities that Binance presents. So I'm leveraging on Binance funds to open this position. So instead of entering with $10, as I enter 10s and I select everything, it will multiply my position with what? With times 10. So can you see now 9.98 USDT is what it costed me because that's what I have. I only have 10 USDT. But when it shows here, what did it show? It showed 99.7836 USDT. So meaning that I multiplied the cost with the leverage, which gave me the ability to enter the position with this amount. So it gave me the ability to enter the position with 99 USDT. So if there is profit, if there is a movement in the market now, let's say the market moves 10%, instead of me to see 10% of $10, which is my capital, is $1, instead of me to see $1, I'll be seeing $10 because my position is 100 USDT, even though what it costed me was $10, but the position I was able to open is $100. Why? Because I'm on 10x leverage. So it means multiply my position by 10. Multiply my position by 10. So I'm supposed to trade with $10, but it's multiplying it by 10, giving me opportunity for higher profits. So this is how you make profit. If it had been on spot trade, if I trade with $10 and the market moves 10%, I'll be earning just $1. But if I am on futures, if I trade with $10 and I'm trading on 10x, if the market moves 10%, I'll be making $10. So immediately the market hits my take profit, or I'll be explaining that what take profit is. Immediately the market gets to the place I want it to get to, and it gets to 10%, I might close the position. My balance will increase to $20 instead of $11 because I have traded with the amount. And you also need to note that if the price goes against me and the market moves backward, then 1%, I'll be losing the total $10. That's why you have to watch my next video, which is on risk management. It's more than strategy. Trading on futures, even forex, and so on and so forth, is beyond trading with a good strategy. You need to note that the risk to reward and the risk management that you are applying really matters a lot, because in trading, capital preservation is number one. Capital preservation is number one. So this is buy, this is sell. So when you are buying now, you are longing. When you are buying means that you are saying that, okay, this ADA now will be going up. Let me click on this. When you want to trade futures, there are some analysis you must do before you start trading. You don't just enter a trade without knowing where the market is going. So that's why we have something they call the chart. So this is the chart. When I click on the chart, I'm on a 15-minute chart now. As you can see, this is an uptrend currently. The market dumped recently, and ADA moved from 0.58 to 0.70, and now it retraced a little, ranging here and deciding where next to go. So as you can see, the market is moving. So you don't just trade, you must understand fundamental analysis and technical analysis. You must watch my next video. I'll be giving you instructions on what to do, on how you can be making money on these futures. Futures is fun. Trading on futures is very, very fun and interesting. It's very simple. I'm taking my time to explain it because of how complicated it can be to some people. So you can make sure you watch the video more than once, watch it twice, 3 times, as long as you understand it, because at first you may find it hard to understand the video. So when you are buying a position, you are longing a position, meaning that the assets you are purchasing will be going up. And when you are selling, it means you are shorting a position. As I've said earlier, when you are trading on spots, you only buy, and when it gets to a particular level, you sell. But when you are trading on futures, you can short a position, meaning that as the asset is going down, you are also profiting from it. On spot, when it goes up, that's the only time you can profit. But when you are shorting an asset, when it's going down, you're also making profit on it. Okay, so that's about buy and sell. So the next thing here is to consider the limits, the type of trade. We have different type of trade here, but I'll be only majoring on two, which are limits and markets. Now, limits and market. I explained earlier that the red and the green prices, the figures you are seeing here, are the prices of the market. The one in red are those who wants to sell. The one in green are those who wants to buy. So when you are trading on limits, now let me go to the charts. Currently, the price of ADA is 0.6768 US dollars. You can see it's fluctuating 0.6767. So currently, now if I look at the chart and I did some technical analysis and discovered that the price of this ADA will be going down to around, watch the movement, around, let's say, 0.6623. So if I discover through my analysis that the price of ADA will first go down to 0.6623 before it goes up, so there is no need for me buying at this point when I know that it will come down before it now start going up again. So what will I do? I will place my buy order on limits. So I will put it on limit 0.6623. So my order won't be executed instantly. It will be placed on open orders. So but once the order is executed, it will be on open position. You will find them running here. As you can see, I have about 12 orders that are on limit trades. So that's how you use limits. And when you are on market, it means that you want to execute the trade instantly. So look at the current price now, 0.66 here, 0.6674, 0.66 6775,
0.6778. That's where you check the market price. So if I say, okay, I want to buy with the 100% of my available balance at this current position, and I click on buy, it will instantly execute the market for me. It will instantly execute the trade for me at this current market price. So, and the same thing for sell also. When you are shorting a position, when you are giving a signal now and you are told to short the position to sell the market. So, if you are giving a value limit that you should enter the market at this price. Let me go to the chart again. Now, I say short is that the trade you are seeing the trade going down and you want to profit from it when it's going down, not only when it's going up. Going up is longing, going down is shorting. So, let's say if you want to short from here and with the hope that the trade will be going down and get to a place like this. But you discover that looking at the chart, the trade may likely come up a little bit first, maybe to this 0.7070 limit, maybe to get to 0.7007 before it start going down again. So, and you want to short it, what will you do? You will place a limit around this side. You place a limit around this side, 0 point short. You short the position that 0.7007. What you are doing now is that once the price gets to 0.7007, sell this market for me, sell this asset for me, short the market. So once it touches the place and it starts going down back, then you start making your profit. But once it touches the place and it continues going up, that means you'll be losing from your current trade. What you purchased, you'll be losing it. So now that is that for limit and market order. Now the next thing I will explain here is the TP and the XL. TP means take profit, while SL means stop loss. Now these two things are necessary when you are taking trades. Take profit and stop loss. Take profit is that when you, let's say you long an asset from this current price now 0.6793, and looking at the chart, let me go to 1 hour chart. Looking at the chart, you discover that okay, the price will further get to 0.70 before you exit the trade. So maybe you are seeing the market getting to 0.700 before exiting the trade. So your take profit should be around that 0.70, or just make it 0.6999. If you are in part of a community and you are being given signals of a trade, you'll be given both the price to enter, maybe limit or market price, then you'll be given the stop loss and you'll be given the take profits. So once the price of this asset gets to this point, it will automatically take the profit for you. It will automatically exit the trade with the little profit or the profit you have made. And for the stop loss is used to control your losses. So there is what they call invalidation points when you are trading the market. Invalidation points, and when you get to technical analysis, when we get to that point of doing technical analysis, I'll be explaining that. But for now, let me just briefly explain what it means. Looking at the chart now, it's on a downtrend. Generally on 1 hour time frame, it's on a downtrend. It means the price of this asset is going down. The price is not going up, the price is going down. So there are certain points on the chart that when the price of the asset gets there, it tends to consolidate. It moves up and down. It moves up and down. It moves up and down. So when the price of the asset gets there, it won't move directly. It's either it continues going to that direction where it started or reverses. So because of that, you would need to set your take profit or stop loss around that point. They call it support and resistance. So let's say I'm buying the asset from here now. I'm seeing the asset going up, and if the asset eventually comes down, I want to limit my risk. So let's say I place my stop loss below my entry point, that okay, when this asset breaks this level, that means it's going down, further down. It has become the trade has become invalidated, meaning that once the price breaks this consolidated price region, it means it's going down, it's not going up again. So because of that, I would place my stop loss around that place. I'll place my stop loss around that place. So let's say the stop loss is 0.6325. So I set 0.6325. If you are not interested in technical analysis, fundamental analysis, analyzing the market, you just want to be given the value, take the trade, and enter the market, you can chat me up on Telegram, on WhatsApp, or just drop a comment on the channel. Just drop a comment. So haven't set your take profit and stop loss. So the next thing you just do is to click on buy, or if you are shorting, you click on sell. If you are buying, you click on buy. If you are shorting, you click on sell. So now I'll just randomly take a trade without analyzing, just to show you some things again here. So that's how you take a trade generally. So let me take let's select BTC. Okay, so this is Bitcoin. Let's say from this Bitcoin now, it's on 50x. Don't forget I said if you set the leverage on 50x, when the market moves 1%, you either gain 1% or lose. You either gain 50% or lose 50% of the amount that you entered the market with. So the position size, okay, I have explained the position size. The position size is your leverage, the amount, the leverage amount multiplied by the cost amount gives you the position size. So let's just move this down to 50. Let's leave it at 50x. I'm not checking the chart. Let's just trade randomly to check. Okay, let's say we are buying at the market price now, buying BTC at this current market price. Let me read: no stop loss, no take profits, just for an example. So market price, so that it can be executed instantly and we can all see. So let's say I'm entering with 25% of this total amount, which is, don't forget, I'm on isolated, so it doesn't touch the remaining balance. It only touches the amount I'm using to enter the trade, which is 25%. So let's say I'm entering with, okay, let's say 2.09 is ranging. So let's click on buy. So I've entered the position. As you can see, all the ones I have here, they are still on limit, but immediately I select market order for this, a position was opened here. Now look at this position opened now. Okay, there's a mistake. Let me reduce. You can either add or reduce your margin from here. Just click on remove. So I want to remove okay, they said max I can remove is 0. That means I entered the market wrongly. So let's just leave that now. So if you want to set your take profit and stop loss, maybe you didn't set it from here and you want to set the take profit and stop loss. So from here now, I can just, okay, let my stop loss be a little below here, 31,282. So let's say I put it here, position 31,282. So okay, let's make it a little 31,500. Okay, 31,600. I mean, if it hit 31,600, I'll be losing $2. So let me select 31,600. Now take profits. You can also set your take profit here. Now don't worry about the charts I'm doing, just focus on the application. So let's say when it gets to 31,878, I want it to take profit. 31,878. Now if you hit this level, I'll be making 1.87 USD. So I've selected it. Now as you can see, I didn't even do any analysis, but right now I'm on profits, $0.5. So if you want to close the position, if you want to check the distance, just click on this share and you can see what I've had. So just close the position from here, close the market from here. So I've closed the market. Now I want to close it manually. Now I don't forget my balance was $10 when I was starting here on the futures, but now because I opened the market, I just opened it randomly to just show you how to open a trade and how to close a trade. I'm now having $10.32. So if you want to take the trade, don't just take it without having a predefined value, without checking the chart. So make sure you are giving values. So in case you want to join my signal group where you receive signals on futures trading daily and make some profit for yourself, make sure just chat me up on my I will be dropping the number that you'll be chatting on the description of this video. And also I'll be dropping the WhatsApp group you can join, or Telegram you can chat me, and also you can drop a comment if there's anything that you need to ask, a question that you need to ask. If there's something that you want me to point your attention to, you can just drop your comment on this section. And also make sure you subscribe to the YouTube channel for subsequent video upload. And the next video I'll be doing how to manage your risk, because risk management is very necessary. As I entered the market now, I just entered blindly, but if I want to trade, I won't enter that way. I won't enter the market that way. You understand? So thank you for staying true. I hope you've gotten any value from this video. If I thought you have gotten a value from this video, please make sure you give me a thumbs up and subscribe to the YouTube channel. Thank you very much, and I'll see you in the next video.